Thank you very much, Simon. And I want to start this evening by saying a thank you to Simon for anyone that's put on any type of event, be it online or in person. I can tell you from having experience of worked with a team in-house in our office here who put events on all the time, that it is not an easy thing to put together, and there are lots and lots of moving parts. So absolutely fantastic of Simon to put this entire thing together. It may look like a simple webinar when you log in and you watch, but it is a headache to organize, and the fact that he's pulled it off and made it look so slick is an absolute feather in his cap. He's brilliant and he's done a great job, so I'm very thankful to him, and especially thankful to him for this opportunity to reach out and teach people how we as professional traders approach the market. So my topic is trade like a master with the profit expansion strategy. So the profit expansion strategy is one that I've put together along with a team of research students here at Master the Markets. And what we do as professional traders is we build trading strategies from the ground up. We take a concept and we test it, we put it into the market, we find out how it performs in real market conditions, and we run with it. So I'm going to show you the entire process behind how we've done that and how we've put this all together. So I'm going to kick off. My name is Rishi Patel. I have a computer science background. I used to own a video production business. In 2008 that stopped working for me, and so I looked towards financial markets as a solution. My business partner Thiru Nagapan, who some of you will definitely have heard speak on Around the Clock, suggested to me, and I met him in 2008, and he said to me, look, I've always been looking to get into trading. I said, let's do it. We went to a couple of seminars. We paid ridiculous amounts of money for some courses, but we became very good in a short space of time, and we started to trade on a professional basis. We're founders of the Traders Open Day, and I've spoken recently at the Guangzhou Easy Forex Conference in China as well on trading systems. So interesting fact about me, I love working with children, and I love training martial arts. I'm a second degree black belt in a martial art called Choi Kwan Do, and this is one of my true passions aside from trading, and trading of course gives me the flexibility to do things like this. So with that background complete, I'll move straight on into my presentation. In this presentation I'm going to show you how, one, I built the components for the profit expansion strategy that gives you a winning edge in the market, and how important it is to have an edge in the market which is consistent. I'm then going to show you the exact percentage probabilities for certain bar patterns that set up in the markets, and the idea of that is to give you a winning edge in the market so that you can have a fantastic little edge, so you have an understanding of probabilities in terms of bar patterns and the way that they set up. The results for 6 currencies and 3 years with the best exits for the systems that I've created, I'm going to share that on this webinar as well. So everything that we do here, just so all of you know, is been made into a PDF. My presentation by one of my colleagues has already been made into a PDF, and so I'm happy to send this out to you as long as we can obviously get your details. All you need to be able to do to do that is to sign in to our website, which is traderstoolbox.co.uk/free gift. In fact, I believe I may be able to send you all out a link. Let's have a look here if that works. I'm not first time I'm doing this, but there you go. Or I'm sure if I've only sent it to Simon, then he'll send it out for me. But if you would like to get a PDF of the entire presentation, a set of advanced trading videos, and a free one-to-one consultation with a professional coach with regards to how you can create your own trading system, or even use the profit expansion, then we're happy to do that. Just make contact. So building of the profit expansion strategy, how did that happen and how did it come about? So first of all, before we go into how we built it, let's have a look at what most traders do here in the market and how they normally approach the actual market, and why they don't really get the results that they're looking for. The first and biggest problem that most traders have is that they have no idea in terms of how to consistently build parameter sets. So what I mean by that is, supposing I ask someone to identify trend, and I do this a lot. I meet a lot of people who are learning to trade or in the process, and I have never really come across with anyone with an exact quantified definition in terms of how to define trend. So the general definition tends to be higher highs and higher lows. Well, that's fair enough, but then how do you identify the highs and the lows? And then there's a little bit of a pause, and people think that there's one here and there's one here, there may be one here, but there's no exact quantified method. And having an inconsistent set of parameters leads to execution of trade opportunities also being inconsistent as well, and whichever statistics are derived from that also become invalid as well. So you have an inconsistent set of parameters, it leads to inconsistent execution, and as a result of that you have an invalid set of statistics, and because of that the results themselves are inconsistent, and this is a cycle and it repeats itself. And this is why most people that I meet that are trading the markets aren't able to make consistent money, and they do just move sideways, i.e. they make profits, they make losses, they make some profits, they make some losses, and it's not really able to be steady growth. It all stems from the set of parameters that are used. So we're very fortunate because we're mentored by a gentleman called Mark Brown. You should definitely check Mark Brown out. He is a quant trader, and he has 40 years plus experience trading the financial markets. I believe his website is markbrown.com. If you click onto his website and look under the research tab, he actually headed up a project called the X-Files project, which was funded with $10 million US by various institutions in the States. And what he gave us was an exact methodology for how we can actually go about and create trading systems to be consistently profitable. And here's Mark in 2013 at the Elite Trades Conference delivering to some of our advanced clients just there. And what he taught us was that first element of a trading system is that we need a strategy, and the strategy needs to be broken down into a rule set. So you need rules for entry, you need rules for stop loss, you need rules for the target, and you need rules for money management. So these types of rules need to be integrated into a crib sheet. Once you have your rule set in play, then you have a next component that comes in. So a lot of people I speak to, even people I was speaking to today actually about this, mentioned to me that they want to get a really great strategy, or they want a really great intraday trading strategy. You see, that is just a single component of what you need to make consistent money moving forward. What you need is a strategy, but then you need the psychology to be able to consistently execute that as well. And the psychology to consistently execute without being worried about what's happened on the previous trade or what could happen on the next trade, the psychology to consistently execute comes from having a very strong understanding and belief in the strategy that you've built. And the way to do that is to have a set of results. Now once you have the results, you're able to optimize your trading system. So you have a strategy, you test it in the market, you execute it consistently, you're then able to optimize. So you'll get a set of statistics off the back, and those statistics will include things like reliability and expectancy, and these are important things to understand in terms of a trading system. What this leads to is a consistent set of results in the long term. And this is really what traders need in order to be able to make consistent money moving forward. Most people do not have very exacted parameters, and there are a lot of terminologies that are throwing around in the industry like higher lows and lower highs and things like that, but no one I've come across has an exact definition for how they quantify a high or a low. And this is what Mark Brown and his team actually taught us, and what we use now to build all of our trading systems. And it's the only thing that's given us the conviction in which we can not only trade the market live every evening at 9 PM in our live trading room, not only do that, but also keep a log of every single trade that we've taken historically. On a profit and loss, every single trade, be it a loss or a profit, is all printed on an Excel spreadsheet which is shared with all of our clients. Not only that, but now we've assigned a £15,000 live cash account to trade our strategies and components live, so that people can actually see the results and they have a belief and understanding that they also can do it. So we were showing people our personal trading accounts in the past. People weren't able to conceptualize some of the figures that we were making, and as a result of that, we've now segregated just £15,000, and we're actually trading on a live account, and I'll show you some of the results later on. Let's talk about these components in a little bit of depth, because they are the core components on which I have built a trading system. So the first component is the crib sheet, and the crib sheet includes rules for entry and re-entry, initial and trailing stop losses, pre and intra targets, and your money management criteria. So these criteria are really important to have inside of a rule set. That rule set is what's going to make your strategy. When you have this rule set, the most important thing is these parameters are consistent. If they're consistent parameters, then you can test them consistently. When you're looking in real market conditions and not just looking back on historical charts, when you're looking back on real conditions in the market, you're able to actually execute consistently without worrying about whether this is or isn't a setup. I wonder how many people have had this this feeling when they're trading the market on a live basis, thinking, should I get into this trade? Does it look good? Does it fit my rules? I'm not really sure. This can only stem from having an inconsistent set of exact parameters. And so if you have this parameter set, you have an absolute belief. And if you have an absolute belief in your system and the rules and the numbers work, probabilities are stacked in your favor, you will make consistent money, and it all stems from a crib sheet. One thing that I didn't mention at the start of my presentation is this is going to be a very interactive presentation, so we're going to be handing out some fantastic prizes. So do pay lots of attention and take as many notes as you can, because in a short while I'm going to be asking some questions which you can then throw some answers at me on, and we can give away some really great prizes. So 4 degrees of freedom are required for entry rules. So I've said in the crib sheet that it includes rules for entry and re-entry. For entry, you require 4 degrees of freedom. So you need to choose from 6 key tools: support, resistance, price action, news, indicators, time frame correlation, price waves, and phases. So you're going to pick 4 of these in order to build a trading system. You see, you may look for a price action setup. Let's say, for example, if you're looking for a short setup, you may look for 2 buyer bars followed by a seller bar. That we class as a momentum pivot, and that could be looked at as a price action signal. You may then look for support, which may be previous swing highs and swing lows. You may look, for example, for indicators. You may look for the RSI to be above a certain level, or you may look for time frame correlation, where the weekly is in an uptrend, where the daily is in an uptrend, and the 4 hour is in an uptrend. So you need to pick 4 of these degrees of freedoms, 4 key criteria for entering a trade. That's very important. Then you're going to execute your system consistently. So you take your trades according to quantifiable parameters on a consistent basis every day. Now 80% of this is psychology, which is why it is the psychology component in the system. Valid statistics build trading conviction for optimization. You see, valid trading statistics will be generated as a result of executing consistently. If I have executed 20 trades on a consistent basis, and these 20 trades are according to an exact set of parameters, so I've looked for the exact same entry, the exact same stop, I've looked at the exact same target, then what I have are statistics on the back end of that to tell me how this system actually performs, and that's very important. And when we built the profit expansion strategy, this is exactly what we did. It was the same criteria, same parameters used for every single trade that we took. Okay, so that's very important just there. So then we have a stats review. So with a stats review, we then review things like the reliability, the profit factor of the trading system, and that statistical conviction gives you the edge in the market for consistent profitability. Once you have that statistical conviction, once you know, for example, that let's say your trading system has a 60% reliability and it has a profit factor of 1.7 to 1, so for every trade you enter you have a 1.7 profit for every 1% that you risk. Once you have all of that on your side, it doesn't matter when you get a string of losing trades, because you know in the long term your trading statistics will turn around and you will get to profitability. So that's really the key thing, and that's what's important here when you're reviewing your statistics, that you've executed consistently. Very, very important. So how we publish a trading system: we actually build a crib sheet. That's our rule set. We then have back testing, so we actually go back historically in the market and check and test to make sure that this system and strategy actually works. So what I'm going to show you are the back tested results for the profit expansion system. And then you have optimization, you have forward testing, which is simulated, and that's forward testing on a simulated account. So what we'll do is, once we optimize the results, we then forward test to make sure in a demo environment this makes consistent money for us. The next thing we do is we take a small live trading account. Anything up to $100,000 is acceptable, and we trade this live. So what we do is we incorporate things like slippage, we incorporate things like not getting fills on certain positions or missing certain trades and things like that. How does that all affect our trading statistics? That's the key thing to understand. And then we forward test using a live account, which is where we actually get to make the real money and actually get to make real wealth. So what I want to do, just to keep things nice and interactive, we have the gift of now, which are our little games that we play all the way throughout the webinar, just so I know that what I'm saying is making sense, people are paying attention, and just so we can be nice and interactive, and I don't put anyone to sleep with my super soothing voice. So what we're going to do is, we have a 2-day workshop which we call Traders Toolbox. It's an advanced workshop, and it teaches people how they can build trading systems from scratch, and we have the audio program for that, which we actually do sell independently. It's worth £497 plus VAT, and I'd love to give it away for free to someone on the actual webinar this evening. All you have to do is answer a very simple question. I'm going to send the model answers, I hope, to Simon on a chat just here, so he's going to know what to look out for, because I'm not sure if I will be able to see the answers. But the question is, and it will be for the first person who can adequately give me the actual answer to the question, will be the person to win. The question is, name the 3 components of a trading system, what they are, and what are the rules you should include in a crib sheet. So maybe Simon will be able to monitor the answers that come in for that. Please punch your answers into the chat box, and we'll have a look out for which one comes in first with all of the right answers to both parts of that question. And at that point, if Simon does drop you a message, or I'm not sure how that system will work, but it'll be great to make connection. We just need to grab your details, and one of the team from the office will make contact to send you out this really great prize. So I'll give people a little while to, because it's quite a long question, so there are quite a bit of things to type in. So take a little time out, type the things in that you think are the correct components, and maybe I'll give you about another minute or so, and then we'll crack straight into the next part. We have a winner, Simon? We do. Fantastic. So, yes, who's that? Or how does that work? Or perfect. So if Andy could shoot across Simon, maybe on a private message, just his name, his email, and a contact number, one of our team will get in touch and make sure that that gets sent out to Andy. That's brilliant to hear. Okay, let's move straight on. So we have a fantastic live trading environment. We run at 9 p.m. every evening. It's our live trading room, and off of that we have built 36 months worth of results, all end of day trading. So just daily bars. All we do is trade daily bars. We place pending orders to open, and we have a fantastic return on there of 54.60% so far. So that's what we have just there, and it does have less than 1% risk on every single trade that we take, and every single month of our trading is transparently printed, not only on a trade by trade basis, but on a month by month basis, and then obviously you can see printed onto an equity curve as well. So it's 15 minutes every day, our live trading room at 9 p.m. We place some pending orders to open, and every single trade that we take is fully transparent. You can see here in March we're having a really great month with a 6.66% profit so far, with just some 3 end-of-day trading systems which we trade every day. So a lot of people say to me, can you put your money where your mouth is? Or a lot of people say, you know, very straightforwardly, but look, we have never seen anyone give any account statements or anything like that. So at the about 6 weeks ago, myself and Tiru had a discussion and said, look, I mean, we've shown people what we did on our personal accounts. It wasn't conceptual, it wasn't believable. So what we've done now is we put a £15,000 account aside just to trade our live trading room strategies, and this is the account statement from that, and you can see we are up in closed profit of £786 just there, and that represents around about 5% gain on the initial £15,000 that we deposited. So these are real life account statements of every single trade that's being taken, and we'll continue to actually run this market. We'll actually continue to place those trades from the live trading room that we take on that £15,000 account, and continue to grow this this account slowly and steadily, and I'm expecting profits of between 15 to 25% on an annual basis. And this is what we do every day. This is our profession. We build these systems, we maintain them, we make sure they carry on working, and if they don't, we know how to tweak them. So that's what we've done. So the profit expansion strategy, let's go into the specifics. So first of all, when we were taught by quant traders, these guys are absolute geniuses. I mean, their brains work like computers. So they told us, let's take a step back from everything you've learned so far about trading, and let's do it from a really simple base. So they said to us, look, if you were to take 2 bars, it can be candles or OHLC bars, really doesn't matter. Take 2 bars and remove the opens and the closes, and you only have the highs and the lows of the bar. So just 2 parameters, high and low. How many different combinations can you make? And then the answer, of course, was 4. You can make 4 combinations. You can get higher highs, higher lows, lower highs. You get inside a bar and an outside a bar. Now, what's important to understand is not just that there are 4 variations when we do that. What's more important to understand is the first batch of bars give us momentum strength. The second batch give us market compression. Now, why is this important? It's important to understand because once we know we're looking at a market compression in terms of a bar, we expect an expansion to take place after a compression. Even more so than that, they then went on to give us some exact percentages for how often these bars set up. And if you test this in any market, any time frame, you'll see that this is generally true. You'll get 40% of bars which will be higher highs and higher lows. 40% of bars will be lower lows and lower highs. 10% will be inside of bars and 10% will be outside of bars. When I tested this with a price expansion strategy, I found over the last 3 years that around 12% of the bars setting up were inside bars. And so over a longer period of time, when I looked at data for 10 or 20 years, I actually found that you did get in around about that 10% level being inside of bars. Now, if we know that, we know that we can then design something to catch the following expansion from an inside bar. So we basically took this concept and we applied a consistent entry and stop loss, and we looked for 5 exits for the price expansion strategy. So we tested. I wanted to find out the question in the research project that we did with the Master of the Markets clients, part of our live trading room. The research and the question that we had at the very beginning was, well, how is it possible to catch the best amount of profitability after getting into the trade? Where is the optimal exit point? Where is it? So that was the question we wanted to answer. So we tested 5 exits. Now the entries were all based on quantified parameters and 4 degrees of freedom, as I said, that you need to have in your crib sheet. The trend was identified only by price action. Highs and lows are identified and on a quantified basis. We looked at waves and phases. Fib extensions, retracements were also taken into account. Stops based on technicals and kept consistent. Entries were also kept consistent. So for the research project that we did, these were the guidelines that we used. Now, when I say that the trend was identified by price action only, and the waves and phases, fib extensions we used, most of the time what tends to happen is when people talk about Elliott waves, or when people talk about, let's say, Fibonacci retracements or extensions, they normally pick a point in the market to which they can draw the level from and to. But that level generally tends to vary. It's never consistent. And so if the level is never consistent, the profits and bottom line profits will never be consistent. But also, not only that, the results, the statistics become invalid. So what we have, and we're very fortunate to have, is an exact method of identifying where the phases and cycles are in the market. And these highs and lows, which I've plotted here on the chart, those are exclusive to Master the Markets, and we were very fortunate to learn from these quant traders, and it's the basis of every single trading strategy and system we've built ever since then has been based on just these highs and lows in the market. So it's been very, very fortunate of us to be able to learn this information from these quant traders, so that we can have a consistent way of identifying where highs and lows are. And that basically means for us that Elliott waves we look at are consistent, waves and phases, phase 1, phase 2, that's all consistent for us as well. When we draw a Fibonacci extension or retracement, that's consistent. And a good example of that is on the pound dollar, which I'm going to show you just now. But the fact that you're consistent in your highs and lows gives you consistency through Elliott waves, and phases, fib, retracements and extensions. That also means your trading statistics, which you knock out at the other end, are also meaningful. And if your stats are meaningful, you have a lot more belief and understanding in the trading strategy and system you're using, so your profits become consistently profitable as opposed to sideways. That's the main thing that the message that I want to get across today really is that your parameters must be consistent to get consistent profitability. I believe that is my approach to the market, and that's what I've found works. We're able to trade that in real market conditions and make transparently, we're able to take superb trades and make fantastic profits. So a good example of this is on the pound dollar, where we've seen a recent compression, a recent market compression where the market has moved sideways a little bit, multiple inside bars setting up. Your chart might look a little bit different to this. This is taken from INFX, which is the broker that we're working with, and this is basically what we've seen over cable over the last couple of days. Now, we've seen multiple inside bar setups. I haven't taken any opportunities based off that, because I know that my Fibonacci, according to my Fibonacci, that is overextended above 150%. But the only way that I can know that for sure and have belief and understanding in it, whereas I don't have any doubts about why I didn't get involved in the market, is simple. It's basically because I have a consistent way of mapping out where these lows and where these highs are. If I have that consistent methodology, then every Fibonacci retracement extension I draw is also consistent, and so my statistics become valid. That way my profits are consistent. And that's basically what we have put together. So, concept of this, we have an inside day, and that means it's a market compression, usually followed by an aggressive breakout. As I said, the results all compiled by the Master the Markets research team. So my thanks to my research team. I hope some of them are on the webinar this evening. Orshi, Paul, Mark, Yvonne. Fantastic job that you guys have all put that together. So thank you very much for your assistance in that. We're going to share some of the fantastic results. The exits that we tested, 5 exits we tested, we looked at the high of how would happen if we get out on the previous bar, what would happen if we closed above or below previous bar depending on direction we're taking, 3 buyer bars, previous swing high and low, and 10 periods. And what does that all mean graphically speaking? It means that if we got out on the high of the previous bar just here, we look to get out of the market, and we are we're looking at the high just there of the previous bar, we exit the market on this yellow line where we have a limit order in place. As soon as we enter the inside bar, let's say for example's sake we enter on the high of the inside bar, when the next bar triggers us into the trade, we have a limit order in place, and that takes us out for a profit on the high of the previous bar. That's the first target. The second target is on the close of the bar above the previous bar. So that's that one just there. Then we look for 3 buyer bars to come into the market. We take our profit off the table there. Then we look for the previous swing high and low. And then we look for the fifth target is looking for 10 bars. What happens after we take 10 bars? What I want to do at this stage is I'm going to show you how the profits and the results and everything like that looks. But what I'll do, I'm on turbo at the moment. And I love, you could probably tell I really enjoy presenting. I'm on turbo and I'm going to put myself on pause. I'm going to ask Simon if there are any questions that are coming through that I could perhaps answer at this stage before I move on. So maybe we can do that for 1 to 2 minutes and then I can crack straight on. I'm well ahead of schedule. No, it should be traderstoolbox.co.uk/free gift. I did test it before I came online. Yeah, if you click the link exactly as I typed it on, you should get a page that looks a little bit like this. And you should just be able to click the yellow button and type your details straight in, and then one of the team can make contact. So traderstoolbox.co.uk/free gift. Fantastic, yes, that'll be very helpful. So if you click onto the link that Simon is just posting onto the chat box, that's the one that you need to use to access the free material, and that's a PDF of the actual presentation itself. It is a advanced set of trading videos and a one-to-one coaching session with a professional trader, either to go over your own trading system that you've built, to give you some feedback on that, or to go over some more depth of the price expansion strategy. Yes, fantastic question, thank you. So the answer to that is we're looking at the range of the bar. So the range of the bar is the high and the low. So for an inside day, we class an inside day using a quantified parameter where an inside day is a bar that is completely engulfed, even be it by 1 pip, either side by the previous bar. So as long as a bar is fully engulfed by its previous bar, even by 1 pip, that would be an inside bar. And likewise, an outside bar would be where the current bar has fully engulfed the range of the previous bar, even by 1 pip. So an outside bar, and if we can maybe I can give an example of the inside bar just here. So you can see that the high and the low is fully engulfed within the previous bar, and if that's true for even just 1 pip, we would class that as an inside bar. We would take that as a potential opportunity if it meets the criteria. That's a great question, and I can't, unfortunately, due to the scope of the presentation, go over every single parameter in detail. So there are multiple entries that I did test, and I've got a lot more information about them. If we speak on a one-on-one, I'd be happy to talk about the different parameters and everything like that. So just drop your name and details into the box on the Traders Toolbox page. Set up a time with me. When one of my team calls from the office, just mention that you'd like to find that out, and we'll set up a time and I'll go over that with you. At the down trading bars first. I'm not sure I understand the context of the question. Perhaps we can take one more while we're waiting for that clarification to come through. Okay, brilliant, no problem. We're going to crack straight on, and Oleg, if he wants to clarify the question, I'll be happy to answer it in just a short while. Very happy to answer that. Yeah. We'll crack on, no problem. Please, yeah, clarify the question. I'm happy to answer that. No trouble whatsoever. So we have the various exits, and we know that. If you want to get one of the permutations that I put together of the profit expansion strategy, again, go to the traderstoolbox.co.uk/free gift. Put your details in. I'm sure Simon will actually put the link into the chat box once again, so you have access to it, and you don't need to look for it. And that website will allow you to get a copy of the actual CD. I didn't mention this the last time around, but just so we're clear with this, with the profit expansion strategy, it is a little bit complex in the beginning, and so we will send this CD out to you once one of the traders in the team have had an opportunity to explain it to you. So we just need to set up a little one-to-one time so we can grow. We also want to reach more traders. We want to grow our trading community so we can all trade larger cash together is one of our bigger objectives. So one of the team will reach out to you. We'd like to arrange maybe a 30-minute Skype call so we can walk you through the nuances, and then we'll be happy at that stage to send you out a free copy of the actual strategy, which includes the theory presentation, the crib sheet, which is the rule set, one of the crib sheets for the rule set, and the set of results for it as well. So that's there. The next thing that I want to do is really just another small prize, just to make sure that everyone has been paying attention again. And this time we're giving away a ticket for our 2-day Traders Basecamp workshop. So this is a fantastic 2-day workshop where we teach people how they can trade the markets using our methodology, a consistent parameter set with a couple of trading strategies on the back of it. It is a live, in-person, classroom-based workshop, and we'd love to give that away to a lucky winner on the prize. Again, I'm going to drop the model answers to Simon on a private message, but the question is, what is it that's exclusive to Master the Markets? So what is the thing that I said is exclusive to Master the Markets, something given to us by Mark Brown and his team? And what do consistent parameters finally mean to us? So what is it that consistent parameters, when we execute consistently, we have consistent swing highs and swing lows, we have consistent ways of identifying price waves and phases, we have consistent ways of identifying trend. What is it that finally bottom line, what is it that it means to us? So I'm going to shoot Simon across the model answer. Let's see if that's going to work there, and paste to Simon Campbell. There we go. Right, so Simon's looking out in the chat box for the correct answer to that. This is for a free ticket to our 2-day trading workshop. Fantastic 2-day experience where we will provide you a full color reference manual. We'll provide you with lunch, tea, coffee all day, and you'll be our guest. Fantastic experience. We love putting them on as well. So again, put your questions straight into the chat box. We're looking for the first person that has answers to the questions, which are both correct. I'll give you about a minute to do that. So there's one thing that's exclusive to Master the Markets, given to us by the quant traders, Mark Brown and his team, which gave us the opportunity to be consistently profitable. And it helps us to identify something very key in the market. And also, what do consistent parameters finally mean to us? Ah! Okay, so a little clue would be there is a method to identify trend. There's a key definition of trend, and it's something that was taught to us. You already all know the definition of trend, I'm sure. So it's something to do with that. So I'll give you another 30 seconds or so, we'll get some answers in, and if not, I'm sure Simon will tell me who the first person to get most of it right was, and then we'll move straight on. Ah, superb. Very good. Brilliant. So again, if That's superb, and I'm sure Simon will pass that on to me shortly. Right, brilliant. That's great. So let's move on. What were the findings from all of the results that we looked at? So first, I custom tailored a superb journal in Excel using all the formulae to be able to put this all together, so we could construct and find out exactly where the profits, losses, everything was. What I wanted to show you, actually, I'm just going to pause my screen. I was thinking I could potentially show you. So show. I just want to check, Simon, that everyone should be able to see an Excel spreadsheet okay. Yeah, on the screen. So this is what we've done. We put this together. You can see every single trading opportunity has been taken just here. This is GBP USD 2013, 2014 on a trade by trade basis. We've got absolutely every single trading opportunity, and this is where we logged and we did the research. We did this all manually. We looked through the market for fib extensions, retracements, absolutely everything. We logged all the profit and losses, and this was a trade journal designed by myself to help us to get that. So then once we had all the results for the various currencies, we then of course compiled that all together onto a box, which is let's have a look. So these are individual results per currency. So where we look at, let's say for example, the euro against the US dollar, 46 trades over 3 years, 22 winning trades, 24 losing trades. It tells us what the net bottom line profit was for that one, the reliability, and we have all the statistics. When we compile everything together, we can see, there we go, that we have 258 trades, and these are the opportunities that are taken, and then we have a certain number of winners, certain number of losers, and then what the net profits are after that too. So where we compile everything together, we can see that the various exits give us different results. We then take all of that, we compile that onto a month by month breakdown to see what the performance is like. The most important thing that the month by month breakdown gives us is the losing months. I cannot emphasize this enough. You need to know your trading system's max drawdown. If you don't know that, again, when you're trading the market and you're taking a string of losses, you don't know where to pull the plug to say your strategy isn't working. You must know your maximum drawdown. As a result of knowing that, you're going to have a very strong edge in the market, because once you know your maximum drawdown, even if you take a couple of losses in a row, you know that it's normal, it's happened before, and you can just carry on placing the trades with belief and conviction. So you can see that we have logged where our maximum drawdowns per exit actually are. Once we have the collated results for everything, we're able to build an equity curve, and that's the key thing there, and I'm going to show you that in my presentation now. So that's the system, those are the results. You can see the second exit of the trading system, which I'll recap again over, gives us the best net profits. When we looked at the general results, as I mentioned already, we had 258 trade samples that we tested, and of those 258 trade samples, the net profit was 69.03%. The next most profitable exit was exit 1, which gave us 16% net profit, and then you could see that there as well. That had a better reliability, but it did have a much less net profit than the actual exit 2. In fact, sorry, it's actually exit 1 gave us the second best expectancy, not the best net profit. Exit 1 gives us the second best expectancy per trade after exit 2. The net profit was actually just under some of the other exits there. But we found that exit 2 gave us the best all-round opportunity, and exit 2, if you recall from my earlier slides, is the close above the previous bar to the inside bar. So it's the close above the previous bar to the inside bar. Now we have 258 trades there, and that's over 3 years and 6 currencies. It may not sound like a lot of trading opportunities, but one of the things that we like here at Master the Markets is precision, and less is more. So if we can do less work and still achieve the same profitability, it would be fantastic. So one of the other things the quant traders taught us was a various filter that we could use to narrow down the number of opportunities. Now when we apply this filter, and I'll call it the alpha filter, when we apply the alpha filter, we actually get to 188 opportunities, but the net profit is still 68.49. So over the same result set, where we take the second exit, we have 188 samples only that we need to trade, as opposed to 258, thereby minimizing the number of trades we need to take, minimizing the number of mistakes, minimizing potential slippage, and everything else as well. And you can see the net profit is virtually the same. And that is a brilliant system, and to get an expectancy or R multiple of 0.43 in a mechanical system is a fantastic bottom line to achieve. So through this we've achieved an understanding of which exit to use from the actual inside bar. We've also worked out which currencies are and are not profitable, so we can filter out the ones that we don't need to trade. And this is the I presented these findings at the London Forex Show on the 6th of February, which was also put on by the Campbell family. Fantastic event, which I really personally enjoyed, and the first one I've had the opportunity of presenting at with Simon. So the superb event. I would recommend you go down to the next one whenever it's being hosted. And when I showed off the equity curve there, we had this one just here, and this was only for pound dollar, euro dollar, and euro yen at the time. But recently we've compiled all the other results for all the currencies, and now you can see where exit 2 before was marginally better than exit 3. We've now got a very, very clear indication that exit 2 is actually the most optimal as opposed to all the other exits. And this is why research is so important, but not only research, systematic research using verified, quantified, consistent parameters, so you have absolute belief in how to trade the system. And this is an entire mechanism in how you can take some concepts and go all the way through to the end, and how you can actually put a strategy together from the ground up, test it, build all your equity curves, and everything like that. Now, if you are interested in sitting down with a professional trader, either myself or one of my colleagues in the team, and understanding how you can actually construct a trading system, and how, if you've already got results for a system, you want to put it into this format, how you can do that, then again, drop your details into the website traderstoolbox.co.uk/free gift. I'm sure Simon will assist me by putting it one more time into the panel. I'll be happy to take a little bit of time out. We'll arrange a 30-minute Skype call. I'm more than happy to talk to people individually about how they can get consistent profitability from their system, maybe as opposed to just being sideways. So again, when one of the team contacts you, just let them know that you'd like to arrange a 30-minute with Rishi or one of the team, in terms of how you can actually build this. I'd be very happy. It's my passion to teach people and to serve in this way. This is our favorite way which we can work. I love this this entire space, because we get to trade and do things that we're passionate about, and I love trading. I love looking at the markets. I love the research, but even more than that, all of you give us the opportunity to be entrepreneurs, and that's a really great thing in itself as well. So I'm ever so thankful for that, and I love the opportunity to reach out and assist people in this journey. It can be a lonely space to be sometimes, and so community is always a fantastic thing to have around you. So final prize for the evening then, and it is another Traders Basecamp ticket. If you just missed the last one just marginally, here's the last one we're giving away for the evening, and here come the questions. It's going to be the most complex set of questions yet, so get yourself ready. Here are the questions. Which exit was the second best for the profit expansion strategy in terms of R multiple? Which exit was the second best for the profit expansion strategy in terms of R multiple? I did mention it. What was the key difference between the general results and filter 1 in terms of something? There was one key difference, and how many currencies did we test for the final equity curve? How many currencies did we test for the final equity curve? So I've just sent Simon the model answers once again there, and I'm sure he will tell me if someone can get all three of those right, or it was close to, and then we'll work out who the first person is, and we'll get the office to make contact and arrange for you to come along to our 2-day workshop, our 2-day intensive workshop, which we love to run. We provide you with all the information you need to trade the market consistently, profitably, with 2 superb trading systems, one end of day, one intraday, lunch all day, teas and coffees. Everything's provided for you. So we buy you drinks in the evening on the Saturday. Fantastic event. We love running them. A great pleasure to be able to serve in that specific way. So I will give you all a few minutes to maybe punch an answer in, and I know I'm coming very quickly. Yes, indeed, sir. Yes, it has to be a little bit challenging. We need to make sure people are staying awake, Simon. So it is a little bit, but you'll tell me who will come the closest, and so we will have a compromise. So absolutely not a problem there. Ah, superb. Ah, brilliant. Okay. Ah, yes, it was a tricky one. Superb. Lots of brilliant. It is. It is indeed. Yes. So Andy won the first prize, I believe. Brilliant. Okay, so lots of Master of the Markets merchandise for Andy. Good work there. I look forward to talking to him and congratulating him personally. Right, so I'm coming very close towards wrapping up, so I'll just I think I'm pretty much there. So now we've been through the presentation, you should know how to build the components for the profit expansion strategy, or build components for any trading system really to give you a winning edge. The exact percentage probabilities for those bar patterns that we talked about in the market: 40% higher highs, higher lows, 40% lower lows, lower highs, 10% inside bars, 10% outside bars. And you should see the results for 6 currencies with 3 years with the very best exits, and the specifics of the system, so you can make long-term consistent profits. And that's my presentation complete. I do believe that's my last slide. Once again, don't forget, just go over to traderstoolbox.co.uk/free gift for the 5-day video course, the advanced trading videos PDF of my presentation. It has been a pleasure, and I would love to take any more questions. Perhaps Oleg has rephrased his question. I'm happy to answer that, and any other questions with, I'm sure, the very limited amount of time we have left, Simon. Great. Simon, I just want to say one more time, thank you very much for the opportunity to present today. I think you can probably hear that I'm very passionate about it, and I love it. And it's great for you to facilitate such a superb environment for people to come together.